And before we go into the results, maybe I'll just give a very brief overview of what the model are, because maybe for those who haven't really seen it, it might be more clearer to understand the model. So the first thing is the swing trading model is a chart that you see here. So we have 2 time window. We have a 5 days model. The backtesting exercise from today is using the 5 days levels, but we also have a 20 days model. So for those who are more like longer term investors or longer term traders, swing traders, we also have a 20 days swing model as well. The model has 3 types of level that we provide. The first one, if we have a bearish bias, like in this case, you see there is a red line and red levels on the right, we provide an upper band. So the upper band represents the highest price level that the model predicts for the asset within the specified period, which could be 5 days or 20 days. So in some cases, you will have an upper band. In some cases, you will have a lower band. So the lower band indicates the lowest price level forecasted by the model within that obviously specified time horizon, which could be 5 days or 20 days. So the model is a volatility band model similar to the 1 day expected move. So we are aiming to forecast the bands or the price ranges that the asset will be in the next 5 days or 20 days. But at the same time, we have also the upper level or the lower level. In this case, is called the risk trigger, which is in the chart, the white line. Every day, you will always have a risk trigger, and you will always have either one lower band or one upper band. So there's always going to be 2 levels, a risk trigger and a lower band or an upper band. The risk trigger represents a very important volatility level, but we don't use it in the calculation of our success because the model also aims to forecast. Let me see if I can see it. If I can see it here, also aims to forecast the direction of the price. So whenever we have an upper band available in the model, we have a bearish bias, and you can see it here in red. Whenever we have a lower band, we have a bullish bias. So as you can imagine, if the model is able to predict the trend or the direction, the risk trigger will also be broken in many cases because we are able to basically predict the direction of the price. I'm going to show you in a second how it looks in the bot, but here you can also see some back testing results. So before we go into actually the actual result, let's go into the bot and let's show you how the model looks. And we're going to do it, for example, do you have a stock that you like the most, Patrick?
Yes, 100%. As everyone, Nvidia or Tesla. So Tesla is at the moment really interesting. After the elections or going really crazy, I think Tesla is one of the biggest interesting.
So if we look at the Tesla model, as you can see, so in this case, what you see right here, this is the model calculated as of the end of the yesterday. We have a lower band right here, 318, and then we have a risk trigger of 382. So obviously, and at the top here, you see the success rate of the lower band and the success rate of the model. When we say success rate, it means that if the lower band today is 318, what will the price of Tesla be in 5 days? And will that price be above 318 or below? If it's below that, then the model is not being successful. If it's above 318, then the model will be successful. And then we calculate the success rate right here. And then obviously in this case, as you can see, we had the lower band right here, so bullish bias, and the risk trigger obviously was broken because we had obviously the election results, bullish momentum for Tesla. But at the same time, if you were to trade long, short, or sell spreads, you would have been profitable in this case right here. We can do the same for Nvidia. So if we type swing 5 days, Nvidia, same thing. We have our lower band right here at 134, and then we have a risk trigger 155. And as you can see, over the past 38 days, the model had a 100% success rate, meaning that the price over this period was always above the swing levels that was sent to you 5 days before. So the 5 days the price stayed above the 5 days level that you see, the lower band right here. And yes, I like your comment. It's great for risk management as well, because now you have a level that if you are in a trade, you could use this as a stop loss target, or if you are looking for an exit strategy, you can also use this as your take profit and so on.